Hey, this is Jim. It's 8:26 a.m. in San Francisco, California on January the 17th. Please note that all discussions, analysis, and information presented are for general informational and educational purposes only and should not be construed as financial or any other form of professional advice. So I'm going to review the 60-minute price bar chart and the 5-minute price bar chart. I'm going to focus on the downtrend lines that are either have been broken by a price move, either sideways or up, or are close to being broken through. So first off, these are the 60-minute price bars in front of you, and you can see my note here. Point of origin is the August 8th and August 12th intraday highs. You can see those right here. And then if you take a look at this downtrend line, you can see the black dot exactly over the high print of the candle above those two time frames. That's what ensures an exact downtrend line. Like I've said before, there are other ways you can draw downtrend lines, but this one, obviously, off the absolute highs, is going to shoot out a downtrend line that's going to be the most long-lasting, the hardest to break. Obviously, if we did, something like this, top of the wick to candle body, the trajectory's steeper, so price will have broken through that much sooner than it would be able to break through this. So I'll carry you forward now to real time and show you where we are with all of this. So this is, you can see that the black dots on it, that shows you that it's the exact same trend line we were just looking at, and you can see what happened. The trend line, price broke through the trend line right at 8:30 a.m. PST on the 16th. So that was yesterday morning. It was a flat bar, traded sideways, and they gutted the stock for 2 hours. You guys know what this is. This is what I call a bear crawl. It's a positive sign that we started an aggressive bear crawl, and then the trajectory starts to round out, and you see that really nice 60-minute bar that we printed this morning. So we're in the middle of vibration. I'll show you that at the 5-minute time frame, but we're in the middle of vibration right now at the lower time frames. So there's nothing really bearish in my work as far as this red bar here. And it wouldn't even really matter to me either way if it were to probe session low. I don't think it will, but it doesn't really matter in the grand scheme of things. So you can see this sort of forecast box right here. This is what I think can happen next, assuming that the stock's going to track. If you guys are followers of the Anemoy terminal or subscribers, you know that we have positive / bullish divergences at the monthly bar level, monthly velocity level, weekly velocity level, daily velocity level, 60-minute velocity level, and the 5-minute. So it's across the board, and they basically, milked this udder for every drop of milk that they can to the downside from based on all the tools that I look at. The bottoming count is extended 2x on my 5-minute model for BAM. So I in the past have never had any fear of wading into a stock, even for a scalp, when I have an extended bottoming count like that at the 5-minute level. If you guys have been subscribers for a while, you've seen how many times we've had a violent price snapback to the upside in an extension like that. So for me, it's a great, even if I'm trading around a core position, it's a great setup for sort of a scalp. And timing wise, usually 2 weeks is very safe, but sometimes I play it more closely. But when you see that kind of a setup in a Nimoy with monthly, weekly, daily, 60-minute velocity divergences, bullish divergences, and we have the benefit of seeing where the triggers are located, meaning we have bogeys to shoot for to the upside. In this kind of a setup, all I've ever done in the past is add. So I either do nothing at all or I add. And when I add, I try to at least spread out the extra units by, say, 25%, just to give myself some room so I don't end up adding, 5 cents away from where I have a core position already that really doesn't accomplish anything as far as averaging down in price. So I try to keep that discipline and just have sort of limit open good till cancel buy orders or manage it actively, and that's how I approach that. Assuming that works, we should have a price snap back violently to the $6 range, to the $8 range, to the $16 to $20 range, and then if the monthly reversion works, that gets you up into the 80s. Depending on what month you revisit that monthly trigger. I'll pop over now to the 5 minute and show you guys what that looks like. But again, you guys can see this important downtrend line is has been breached. We're doing a bear crawl, but it looks like the AMC is trying to turn. Another little note here of interest, this $4.35 plus equals a breakout above the downtrend. That's referring to this downtrend right here. I've also drawn this exact. You can see the black dot. So that's drawn exactly off of those price highs, and it snapped in place. So, depending on when the break would take place, if it happened during this bar here, which we're into a new hour here. This is PST 8:30 to 9:30 price bar. If we were to move up during this time period, the break would be, call it $4.30. I'm saying 435 plus because moving forward, that's a safe number. If we were to move sideways for multiple hours today and then make the break tomorrow morning or later in this session, it would be lower. It would be more like $4.20. But 435 is a real safe number to keep in mind for this downtrend line here, and point of origin on that one is drawn off of the January 2nd and January 8th highs. And again, these are 60-minute price bars you're looking at. Here's the 5 minute real quick, so that you guys can see what's going on. Most importantly, in my mind at least, is you can see my note here. This is a downtrend drawn off the January 2nd and January 8th highs. This is at the 5 minute price bar level again. And so 440 breaks that downtrend line. And again, depending on how long it takes to get above that downtrend line, it becomes less than 440. If you want to take a look at some of the other downtrend lines that we could be tracking right now at this level, they would look like this. And so you guys can see that this is a fairly noisy setup. This is vibration right here. This would be really the key vibration to cross on the way back up in my mind. So it's a little bit under 420. And again, if I were looking at a vibration sequence and being disciplined as far as only wanting to buy on the way back up in this stock, that would be sort of my price level that I'd be looking at. So again, 419, call it 420 just to be safe, but that's vibration on the way back up. Again, you guys have seen this level. 480 is an important vibration level based on the break of the August downtrend line at the 5 minute level. So I'll show you that real quickly and then we'll wrap this up. So this thick red downtrend line here, and you can see the break point here that provides our not only what was the hidden retest level right here, but once the contact is made on a hidden retest level, you guys know the rules, it becomes a vibration level. So that would be a magenta line because we had a fast market break of a trend. This is an attack, fast market attack of a hidden retest level, and then out in time is vibration. You guys can see this would be A, B, C, and we're in a D wave right now, so the cross back above would be E. That could provide the wilt candle buy through this 480 level. So the key levels that we're kind of looking at here at the 5 minute time frame, this 419 vibration, and also the 480. I'm going to get rid of the rest of this noise. One other point here before I wrap up, though, is I'll show you the point of origin on this downtrend line off the August highs here first, and then we'll bounce back over to 60 minute really quickly because I want to show you the reason I think this is going to be kind of a noisy start to the move. Okay, and again, these are 5-minute bars, so you know you're going all the way back to 2022. So that's why that took a little bit of time to scroll back. But you guys can see point of origin fixed in place. So this is a perfectly drawn trend line based on the way I do things, my methodology. You can see this is the August 8th high and August 12th high. 5-minute intraday absolute high price bars. You can see as I click it, you see the dots on the line. And so as we come forward in time, again, multiple years of 5-minute bar price activity. That's where we broke. I don't consider this a break. This is a rejection. That's a clean break, and that's what created, again, this hidden retest level and vibration. So that's a really important level. Let me bounce back real quick to the 60-minute and show you guys a reason I think this will be fairly noisy. Advance once we turn, in the beginning phases at least. You know, sometimes we'll have setups where we have, you know, clear sailing and air pockets up toward hidden retest levels and things like that. Other times we have noisy setups. So, you know, I don't want to draw these things, all of these trend lines on the chart just because it makes it too noisy. We want to focus in on really 2 or 3 most key trend lines. But I'm going to show you guys why this is such a noisy setup. So these are all valid trend lines. I'm not going to make this exact because I want you guys just to get the idea of what's going on here. Okay, so all of those are valid downtrend lines, and you can see, whereas if those didn't exist, we'd have clear sailing up toward this 606 and the 660 hidden retest levels. But because we have all of these downtrend lines, in theory and based on history, price is going to usually either bump its head and reject temporarily, or move through and have to have a hidden retest level, vibration. All of this is typically noisy. So it should be pretty noisy up toward the $6 level. Once we get up into these hidden retest levels and go through a little bit of vibration, then we should be able to move between 660 and call it 890 fairly quickly, and then again between 890 and 13 fairly quickly, and then things start to really loosen up. That makes sense based on a Nimoy repairing the patient's broken spine as far as downside velocity that's been damaged by Adam Aaron's dilution, and then you can start to sail from the 20 to 30 to 40 to 50, and then even above that, it starts to open up even larger air pockets. So we'll leave these off the charts when I do these updates, but I just wanted you guys to know my reasoning behind telling you that at least in the beginning phases of this, it looks to me like we will sort of stair step and start more slowly than what a lot of you people are DMing me and talking about, these, you know, sudden move straight to the moon and all this stuff. You know, I never say never, but there's nothing in my work and, you know, decades of experience that tell me that that's a realistic, something that's realistic to anticipate. That's it from my side, you guys. Good luck.